I want to jump right into an article. This article is about how global uncertainty is impacting mortgage rates. This is from Keeping Current Matters, March 2022. But if you're thinking about buying or selling a home, you'll want to keep a pulse on what's happening with mortgage rates for sure. Rates have been climbing in recent months, especially since January of this year. And just a few weeks ago, the 30-year fixed mortgage rate from Freddie Mac approached 4% for the first time since May of 2019, but that climb has dropped slightly over the past few weeks. From last August until February of this year, mortgage rates went from, let's just call it 2.75%, all the way up to almost 4%, a little over 3.9%, but they have dropped back in the last week or so down to 3.76% on average. This recent decline in mortgage rates is primarily due to growing uncertainty around geopolitical tensions around Russia and Ukraine. Here's a look at how industry leaders are explaining the impact global uncertainty has on mortgage rates. Odetta Cushy, Deputy Chief Economist at First American, says while mortgage rates trended upward in 2022, one intended side effect of global uncertainty is that it often results in downward pressure on mortgage rates. You're probably wondering why that is the case. Well, because investors and countries and institutions from all around the world believe that investing in America is the safest place to invest. And so they will either buy U.S. Treasuries or they'll buy mortgage-backed securities, which sets the rate for mortgages in the U.S. So when an investor from somewhere in the world, including here in the U.S., is willing to take less of a return for a U.S. Treasury bond, that has a corresponding effect of pushing the yield down on mortgage-backed securities. And when the yield goes down on mortgage-backed securities, interest rates will go down. So as more money flocks to the U.S., it tends to push mortgage rates down. As things heal around the world, as we get a feeling of consistency and stability, then typically that tends to drive the yield expectation on the 10-year or the 20-year Treasury bond. It tends to drive it higher, which ultimately drives mortgage rates higher. Cushy added, and that is the Deputy Chief Economist at First American, that geopolitical events play an important role in impacting the long end of the yield curve and mortgage rates. Historically, economic uncertainty can impact the 10-year Treasury yield, which we talked about, which has a long-standing relationship with mortgage rates. Will mortgage rates stay down? That's the question, and they're not down because they're up a point over where they were August of last year. But while no one has a crystal ball to predict exactly what will happen with rates in the future, experts agree this slight decrease or slight decline is temporary. Geopolitical tensions caused U.S. Treasury yields to recede, leading to a drop in mortgage rates. Rates are expected to stay low in the short term, but will likely increase in the coming months. Bottom line is mortgage rates are an important piece of the puzzle in terms of buying and selling homes because they help determine how much you'll owe on your monthly mortgage payment in your next home. In uncertain times, it's best to lean on a trusted real estate advisor to help you make the best decisions and to keep you up to date with all of the latest information.